Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look at the euro currency. So you can see on euro currency nothing stands as good as it was suggested initially in the beginning of the week, and yesterday we also talked about our concerns, our doubts about the upside perspective, because actually even from the technical point of view, even do not take into consideration the fundamental background that we have right now, even from the technical point of view, overall price action here stands a bit irrational to what market should show if it indeed stands bullish. And as we yesterday had grabbers on the dollar index, and we said that probably this extreme point should be taken out. So on dollar index this is lows, here on euro this is highs, and indeed that has happened. But yesterday we said that we have some doubts on the further perspective, and that market really could take the 115 top. So upward action should continue a bit, but this upside potential will be limited because overall price action that we see, it doesn't correspond to normal price behavior of the bullish market, and that has happened. So indeed this spike up has happened here, big sell-off has followed. So this is a kind of the reversal session to this one, because take a look, market taking up the top, create the new top and close not below the lows but close below the session that was precisely previously. So this is of course the bearish action. From the fundamental point of view, there are two moments. First of all, as I said, it's a big question concerning the United States-China relationship in the mutual trading. They could come to some agreement, but the tariffs still working, and they stands on the table, and they impact on the economy. But the most concern of the investors, why this sell-off actually has happened, and why another stage of the risk aversion is followed, we have the inversion interest rate curve in the United States. What does it mean? It means that the longer-term interest rates stands lower compared to the shorter-term interest rates, and that, from the classical point of view, this is some early sign of the possible recession. And in general, the spread between the most short and shortest treasury yield and treasury bills of the 3-month treasury bills and the 10-year bonds stand just at 50 basis points. This is the half of the percent. This is lowest levels since the 2007. And that is what really concerning the investors. What does it mean? It means that despite the cycle of the rate increasing by the Fed, nobody sell longer term bonds. So they still hold them. Some significant demand stands for these bonds, so the yield doesn't increase. And that is the warning sign for the investors. That could trigger the demand for the United States dollar. So what does it mean for us? In a short-term perspective on the daily chart, we still keep in mind the grabber pattern that we have on the weekly. And this grabber suggests taking out of these lows. Second moment, here was kind of the hand shoulders, and here is definitely irrational behavior of the right arm of the hand shoulders. And we know that when the hand shoulders failed, market drops below the lows, below the head. Currently, yesterday we talked about Gartle's triple to sell, and indeed we've got it. Although market hasn't quite reached the 1245 area, 1445, it was a bit lower. Target has been reached, but still we have the ABC kind of the price action, and we have Gartle's triple to sell here. Now, putting it all together, we could start watching for this ABC top D pattern. So OP target will stand precisely at the 112 lows of the market. Yes, of course, we do not have yet final confirmation, so market still stands above these lows, and these lows haven't been taken yet, then this is the final confirmation of the failure. But still, on the price action that we see here, guys, leaves very small chances for drastic upside reversal in the current situation, I think. So on the 4-hour time frame chart, that is another pattern that could be formed. As you can see, this butterfly, which suggests the taking out of these lows and actually moving to the major weekly support 1185, target stands 1145, so it's very close to the major weekly support. Take a look on the same ABCD pattern, guys, that we talked about. Recently, market wasn't able even to hit the COP target. Within a few pips, and approximately 10 pips, market hasn't hit the COP, this minimal target that could be hit and reverse down. On the hourly chart, we have the same story. Actually, on the hourly chart, we have the huge triangle pattern, guys, where market stands. On the weekly chart, it looks like the pennant, so it's small, rather small pattern, and could be bearish continuation. That's what we have talked about recently. So indeed, upward action has happened above the stops, but market barely has hit the 127 butterfly. Even 127 extension has not been made and market collapsed. So C point is still has not been taken out, and that's the moment that we should keep an eye on during today's session. So if market will take it out of the C point, overall this construction will be erased, and the next step will be to watching for breakout of the triangle. If triangle will be broken, that will be another big confirmation that market indeed comes down, and the scenario that we are talking about here starts to work. Actually, I think that's already is working, but still from technical point of view, we need to get some more confirmation. This situation means that it provides a lot of opportunities to go short right now. You could choose any scenario where you would like to take the position. Inside the triangle, when the stop entry order after breakout of the hourly triangle, and some bearish continuation pattern will be formed. Second moment is that currently it's not good situation for taking the long position, because overall price action tends to be irrational and weak and doesn't correspond to normal price behavior of the bullish market.